Hey everyone, and welcome back to another video for today. So in case you missed the live stream, well, okay, I don't blame you. If you don't want to watch the whole 3 hours or so, then this short video should be good enough for you if you want to know what has happened with Nebius during the quarter and what they said during the earnings call. Now, the stock itself has been all over the place. It went down 5%, then up 4%, then down 8%, and now I think it's actually flat. So the market is a bit all over the place. The market is all over the place, not just for AI names, but for everything else, right? Because if we are going to, let's say, take down software companies, then these companies are going down because of AI. But it seems like even AI companies are being taken down. So which one is it? Is it AI going to destroy software? So technically speaking, AI companies should be going up and software companies should be going down. But if AI companies are going down, then maybe the market is thinking that, oh, these businesses might not be as profitable as we think, which also means that if you're not going to be profitable, you're probably not going to last long, which also means that the other companies out there, the software companies, the companies that are extremely profitable and that are generating billions of dollars in profits and free cash flow, well, maybe they are going to survive because guess what? They can adopt AI solutions and make sure that their business runs better, more efficient, more profitable. They can move faster as well. I'll have a specific video on the whole software space, maybe later today or tomorrow. In this video, I do want to focus on what I consider one of the best names out there in this whole AI space, which is Nebius. So if you enjoy this type of videos, hit all the buttons, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So we'll start off here with the consolidated results. Yes, it's extremely impressive, right? The change year over year here, but remember, it's a very, very small base. But as we go through 2026, that small base becomes bigger and bigger and bigger. So revenue for 2025 in the quarter, $227.7 million. For the whole year, it's $529.8 million, still increasing 479%. Yes, there was a small miss, but again, with Nebius right now, I couldn't care less about missing a little bit of the analyst estimates. The analyst estimates currently, they should be disregarded because this is a company that is growing so fast. Let's talk about these estimates maybe a year, 2 years from now. What is important is that this company has their own guidance, their own targets, and as long as they meet and maybe even beat their targets, that is way more important to me. What we're also seeing for this specific quarter is that we have adjusted EBITDA of $15 million, and what we're also seeing here is net income from continuing operation for the whole year is $29 million. Of course, there's also a very positive impact on some of their investments. But when we look at what has happened in 2025, this is the impressive stuff. So year-end ARR well above guidance. Guidance was between $900 million to $1.1 billion, and that has been revised up throughout 2025. Guess what the actual number was? $1.25 billion. Then the year-end ARR guidance is going to be up 7x, so that number is still the same, between $7 to $9 billion, which is also crazy. If we look at 2026 contracted power guidance, that has also been increased. That's over 3 gigawatts. Looking at the locations here, current guidance for year-end 2026, 16 sites. We'll go over some specifics in a bit. So, core AI infrastructure business in Q4, 24% adjusted EBITDA margin. That's up from 19% in Q3 and 10% in Q2. They have, of course, improved efficiency, positive adjusted EBITDA at group level for the first time in Q4. Strong cash position, $3.7 billion. That includes $834 million in positive operating cash flow in Q4. They talk about the acquisition of Tavily here, which is the agentic search. Think about it as the necessary infrastructure pipes for AI agents to search the web. This also improves the pool of developers, but Tavily is still going to operate as a standalone company. I do think that we are going to see maybe a bit more of these types of acquisitions. These are the acquisitions that add value to the offering that Nebius already offers right now. They want to be vertically integrated. They want to make sure that, yes, we can build products in-house, but we don't have to build everything in-house. And so we're going to make strategic acquisitions that add a lot of value to our company, but also to our customers and partners. Moving on to what they said during the call. So they sold out capacity in Q3, Q4, and already in Q1 2026. Group adjusted EBITDA turned positive for the first time. Core AI business adjusted EBITDA margin of 24% in Q4, up from 19% in Q3. Full year 2026 revenue guidance between $3 to $3.4 billion. So let's take $3.2 billion at the midpoint. You can start to see how fast this company is going to grow. And this is not ARR. This is full year guidance for revenue. $3.2 billion. This is a company worth what? $22 billion or so. So even the sales multiple right now is not the craziest thing for a company that is growing so fast. You can think of the end of year ARR, that's $7 to $9 billion, as the potential revenue for 2027. It's probably going to be more than that in 2027 as they continue to grow and grow. They are targeting a group adjusted EBITDA margin of 40% for 2026. Now, 2026 capex guide, $16 to $20 billion. That was incredible to hear because, again, a company worth around $22 billion, your capex at the high end here is $20 billion. That's quite insane. What is even more important is this. They already have approximately 60% of capital needed from balance sheet operations and commitments. 60% already from the $16 to $20 billion. This, again, removes quite a lot of the risks of not executing or not delivering as expected. In Q4, they also saw 2x as many over 12-month transactions versus Q3. The average selling prices have increased by over 50% in Q4. Moving on to some of the deals with Meta Microsoft. So for Meta, both tranches delivered on time, fully in servicing stage as of early February 2026. As for Microsoft, they delivered the first tranche on time in November 2025, the remaining tranches on schedule throughout 2026, with the majority in the second half of the year. Microsoft will contribute full annual run rate revenue starting 2027. Nebius is going to be among the first globally to deploy NVIDIA Vera Rubin NVL72 systems in the United States, Europe, Middle East, and Africa in 2026. Would call it a first mover advantage, but this is one of their definitely competitive advantages over some of the other players. Average contract duration for new cloud customers grew 50% in 2025. GPU pricing is holding strong. They've talked about the pricing for Hopper, so already an older generation. By the way, the depreciation period is going from 4 to 5 years, which doesn't really change much for the cash flow, but it will look better on paper when they talk about a GAAP earnings. Because if you have 5-year periods, instead of recognizing 25%, you're only going to be recognizing 20%, so you're saving 5% here. Again, it looks good on paper. Maybe Wall Street will like it. And some of the other companies are at 6 years depreciation period. So Nebius is still lower than that. So GPU pricing is holding strong, even on previous generations. Q1 pipeline, okay, listen to this. Q1 pipeline creation is on track to exceed $4 billion, and deal terms are lengthening. The average deal size is increasing. I mean, this is a very short summary, especially if you did listen to the earnings call. You know that with Nebius, a lot of these things for them are very boring. This is not a company that likes to be on TV, likes to talk the fancy schmancy stuff. No, this is a company that likes to build and likes to deliver. This is a company that, I wouldn't say under promises, maybe you could say that, but let's say under promises and definitely over delivers. This is a company that, yes, if you are an investor and you enjoy earnings calls where the CEOs are screaming and laughing and putting out insane numbers that might or might never happen in the future, things like that. Sorry to say, but this is not how Nebius works. This is not how this ex-Yandex team is working. This is a company that loves what they're doing. They are going for the big picture. They are going here for the multi-$100 billion, maybe trillion-dollar market. And so if we're looking at the stock right now, yes, it's now down 2.3%. You can clearly see that today, I mean, it's been going up, it's going down. CoreWeave is down a little bit. Iren is down a little bit. Core Scientific is up 0.6. White Fiber 0.1. Cypher 0.4. Applied Digital is down 1.9. HUD 8 is down 0.5. Even the other companies, it's again a mixed day. Oscar is up 6.6. One analyst has put an $18 price target on the name. Grab also full reversal. I believe the stock was under $4 yesterday after hours. It's now up 2.84%. Micron back at $425. Mercado Libre also got a positive analyst note, but talking here again about Nebius. The company is very small compared to what I believe it will become in the future. If you look at the revenue that they have generated in 25, if you look at the revenue that they expect to generate in 26, look at that growth. Look at the potential ahead. Look at the exit rate, ARR. Let's say they reach $9 billion. So we're going to go essentially from, again, $3.2 billion in revenue in 26 to potentially $9 billion in 27. What's the multiple that you're putting on that? Of course, there's always execution risk because we're talking here about huge increases in numbers. We're talking here again about building data centers, acquiring GPUs. These huge complex clusters needs to be built, need to be connected. Yes, there is always going to be execution risk. If there are any delays, this will impact, of course, the ARR. This will impact when you can recognize the revenue. This also answers the question that I've seen. Oh, if we see that the active power is now that amount, which is more than before, which I think was 100 megawatts, now it's 170 megawatts, why aren't we seeing a bigger increase in revenue? Again, it's all about when they start generating that revenue. Because if it's, let's say, the last week of the quarter, then of course you're not going to see the full impact. We will start to see the full impact 3 months from now, 6 months from now. But looking at the big picture, I'm now only talking about Nebius, but this can be applied to the others as well. The big picture here is that there is a huge market ahead. I mean, these big tech companies aren't spending hundreds of billions of dollars because they are bored. No, because they see the opportunity ahead. I also think, and I've said this from the start, which is why I put Nebius at the number one when you talk about neo clouds, or in their case, AI specialized cloud players, because I do think that Nebius is the best in the category, not because they also do colocation, they also do bare metal stuff, but they have that software layer. I think that's going to be a huge advantage for their business. Another thing they mentioned during the call, we finally got some more information on the stake in ClickHouse. They still own 25% of a $15 billion company in the private market. I wouldn't be surprised if ClickHouse raises another round in 2026 and they're going to be worth way more. But as of right now, 25% of ClickHouse is owned by Nebius. Very important detail to know. Also, the ARR that they gave us does not include any new mega deal for hyperscalers or anything like that. Based on the commentary that we got in the earnings call, I would be very surprised if we're not going to see maybe another or an extended deal with Meta or any other player out there. Why is that? Because Nebius, some others are also delivering, but Nebius specifically has been executing like crazy. And when these companies, especially since you can say, look, we had Microsoft, we have Meta, and we could have an even bigger deal with Meta if we had something to give them, customers, they see this. They say, okay, they're executing, they're delivering, they're maybe best in class. We love to work with them. We love the ecosystem. So they're going to come to Nebius. And guess what? When a lot of these companies come to Nebius and Nebius is sold out or has very limited capacity, well, they can decide with who they are going to work with, which is something that they've told us before. When you have that advantage, you can, of course, price it accordingly, which means that margins are going to be better than what the market expects. You might think I am full of it. I'm obviously biased because I own the name and I've talked about this name in the low $20, so I'm not talking about this name just because it's at $85 right now. We were much, much higher than that. I talked about this name a year ago when we were in the low $20. The vision here is quite clear. Yes, at first there were some questions, but based on the 12-month deliveries that they've done, I think it's safe to say that this is going to be a huge winner in the future. That doesn't mean that CoreWeave is not going to be a huge winner. That doesn't mean that Iran is not going to be a huge winner. I'm still going to say this. As of right now, CoreWeave is the biggest one out there. If you look at the amount of revenue that CoreWeave is expected to report and generate in 2025, it's of course much higher than all the rest. CoreWeave is expected to report their quarterly figures 2 weeks from today, at the end of February. It's going to be a very interesting one because remember 3 months ago, there were some delays, stock crashed. Hopefully everything is back on track for that company. So all in all, that's all you needed to know about Nebius. Yes, the market is a bit stupid, if I may say it, as of right now, because it cannot decide who's going to win and who's going to lose. They just say that everybody is going to lose, unless, of course, unless you are called Crocs, because Crocs is up 18.2% today. Go figure. Anyways, that's what I've got for you in today's video. Hope you enjoyed. See you all in the next one. Bye-bye.